Sterlite Technologies. It was a strong quarter from them. Net profit almost doubling. Margins also saw a robust expansion. Let's discuss the quarter gone by with Anupam Jindal, the CFO at Sterlite Technologies. My analyst Somit will take us through this conversation as well. Somit, over to you.
Thank you, Neeraj. So, Mr. Jindal, your margins have expanded not only compared to last year, but also compared to last quarter. So, what has aided this margin expansion for the company?
Yeah, so our margins have got better over the years, primarily because of operating leverage. One of our facility was underutilized to the extent of about 40 to 50% till last year, which has got better utilized with the better margin, with the better demand coming in from overseas market. So the cable facility has got now 90% utilization. So that is one of the major contributor to the margin expansion. Another expansion reason is that our new products portfolio, which we have developed over a period of time, that is also helping us getting better. Internal efficiencies, which we continue to work on our cost front. That's again another reason for our margin expansion, and coupled with some of the pricing improvement which we have seen in last few quarters, which is getting translated into our order book, overall realization getting better over the period. So about 30-40 cents, that kind of a 30-40 cents per FKM, that is also helping us getting a better margin. So I think this margin which we are getting is because of this. On sustainable basis, if I were to say, with the service and software business picking up, I think on sustainable basis we can still have 24-25% margin in short term.
So is there more upside to this margin levels, or would it sustain at this current level of 28% for the company?
I would rather say that a margin is a derived number. We worked on the absolute EBITDA and growing that EBITDA year after year, which has been done in the past so many years, 5 years. It's increasing at about 47% CAGR for last 4-5 years. So our direction is to increase EBITDA. In terms of the percentage margin, it's a function of how much we are getting business or revenue from the products business, how much we are getting from services business, and within the product fiber and fiber cable. So this 20-29% may taper down to 24-25% in short term or medium term as our services business pick up. And going forward, we need to see how it plays out. But I think our internal endeavor continues to be increasing both absolute margin as well as EBITDA percentage margin.
The recent Navy order, from when will it start contributing to your top line?
Yeah, so just to clarify, that Navy order is still at advanced purchase order stage, which is just one step prior to the formal purchase order. There are certain tests and other formalities which we need to fill in. We are expecting this formal purchase order to come in next 1 or 2 months, depending on how we progress on those things. But very hopeful that in this quarter, that is Q2, we'll be able to receive. And once we get it, we'll start working on it. It's a large order, 3,500 crore, including 900 crore of AMC, which will run for about 8 to 9 years. So even this 2,600 crore of execution will happen over next 2 financial years, including current year as well as FY20. So this is going to pan out in these 2 financial years.
On the recent European acquisition that the company just made, what is the current utilization level of that plant, and do you plan to expand that plant?
Sure. So this European acquisition which were done, Metallurgica Russiana, it's a good manufacturing hub we have got in Italy. It will help us serve our large presence in Europe, which we have developed. Current revenue has 27% coming in from European market, large European customer. So this company will help serve those customers better, closer, and it will also provide us access to those customers which we don't have in Italy and surrounding areas. In terms of the capacity utilization, they are currently at about 60 to 70% of their capacity on optical fiber cable side, which we expect to increase in a short term to about 100% at 3 million. And then we also see an opportunity to increase that capacity to 5 million in short term, and maybe further high depending on how we pan out, because our European market continues to show a very robust growth It has shown good growth, and we also have a large portion of order book consisting of our European orders. So I think it will play out to be very good acquisition, already very positive to EPS from day one. So we can see that impact coming in from this quarter itself. We are yet to formally close that acquisition. Payout is still to happen, which we are expecting in either August or maybe as early as July also. So let's see how it goes out, but it's a great acquisition for the company in the same fiber cable business which we are already in.
The possible acquisition that you just mentioned related to the European plant, how much capex would be required for this acquisition?
So we are still working out, but in our initial assessment, it's not going to be more than 2 or 3 million euro, because it will be more of balancing and some other things. So it's not a material expansion from capex point of view. It is basically looking at opportunities which we are finding. We did find something during our diligence process, so we will have to look at that. But we will come up with our number if at all the number is higher than that. But it's a quick fix opportunity which we see in this. At a larger level, we are assessing our overall cable capacity, including this newly added acquisition. And we will come up with an expansion plan on this also very shortly. Maybe in next 3 months' time, we'll come up with our expansion strategy on fiber cable side, looking at the kind of orders we are getting from all over the world.
And what is Sterlite Tech's overall capital expenditure plan for financial year 2019?
Yeah, so currently the overall capex, if you look at the largest capex we are running, is increasing the capacity of our fiber capacity from 30 million, which we have been operating at 100% for last 1 year, to 50 million. That was announced in April 2017, and we are already midway in that. Very well on track in terms of timeline. By June 2019, we had committed that it will be operational, and we see that happening as on today. And even the 10 million capacity which will be coming out of this 20 million, this will come by December. So everything is on track. The total capex for that was about 1200 crore to be spent over 3 financial years. And we expect a significant part of that to be happening in the current financial year, because we are trying to have capacity coming in as fast as possible. Apart from that, there are sustainable capex of about 60 to 70 crore per annum. So overall 1500 crore of capex to be spent over 18, 19 and 20. So that means in the current year we may have a significant capex. Apart from that, on the cable side, we don't have any capex approved as yet, but we will take that approval from the board in coming time and announce that when we do the final working.
Lastly, sir, what is your current net debt level, and would this increase going forward because of your capital expenditure plans?
Yeah, so current debt stands at about 1100 crore roughly, which is at a debt equity to about 0.8. And in terms of debt equity, we are very comfortable at about 1 with the run rate we are of EBITDA we are seeing here. So with the expansion happening, largely it will be funded through internal accruals, but we may have some short-term capex, short-term funding requirement for this capex. On the top of that, this acquisition will add to our net debt. We see in short term, maybe about FY19 or initial part of FY20, the debt going up slightly, but overall I think we'll be still in a comfortable situation with regard to the overall net debt.